Let's get to our next guest now. David Costa is Dean at Robert Kennedy College and joins us now to chat through some of the issues of the day. Now, David, I see that in your notes that you say you are still positive on pharmaceuticals, but yesterday, here in the UK at least, AstraZeneca came out with worse than expected results. Do you still stand by that optimism for pharma?
Yes, absolutely, Rebecca. I think that when I look at a sector like pharmaceutical, I don't look at an individual company, but I try to look to capture what is pretty much a very broad spectrum, like a spectrum that an index can capture. And why I'm saying pharmaceutical, because if I look at last year, the only winners have been pharmaceutical. So if you had invested in a pharmaceutical ETF, for instance, last year, you would have lost something like 10% versus 40% of the broad market. In Switzerland, the results have been a bit more positive in the UK, and of course, you're going to have some earnings deterioration also in the pharmaceutical sector. But compared to other sectors like financials, I think pharmaceutical is a much better place to be at the moment.
David, we had a guest on earlier, Martin Henneke from Teich, talking about the prospects for the Treasury bubble, as he put it, to burst. How do you feel about Treasuries at the moment? Are we heading for a bubble situation?
I think there is a great risk of having a bubble there. When I see government printing and reprinting money forever, the economy deterioration has just started. I don't see positive economic data in this year. I see a deterioration spreading all over, from the United States to Asia and pretty much everywhere. In this situation, the best thing you can do to hedge against a possible bubble in the Treasury is to own some hard asset like gold, for instance, which had a great year last year and already started very positive in 2009.
You know, we are at this moment right now, David, getting lots of dire economic numbers. We heard some numbers in Japan today with industrial production pretty much falling off a cliff there. We're getting the GDP numbers out from the U.S. later on tonight. As we see governments around the world putting together stimulus packages to try and revive the global economy, do you wonder that we are doing everything we can at this point in time?
Yes, but there is a limit to what you can do. There is a limit to what you can do to stimulate the economy. You cannot change the reality. You can help a bit. I'm not saying that the stimulus is not going to help. We're going to see some rallies ahead, maybe when the stimulus passes. We're going to see some spikes. But we have to look at the economic data. We have to look at what is the reality inside the company. We have to look at earnings. We have to look at companies which are capable to still paying healthy dividends and turn on profits. So I don't see as the stimulus on the government intervention as to be the big solution to the issue. We need to be patient, we need to be cautious and focus on those sectors which have more possibility to protect our money.
David, thanks so much for coming to speak to us. Always a pleasure. Of course, David Costa, Dean at Robert Kennedy College.